Morning, everyone, and welcome to the Minnesota Real Estate Show. Thank you for joining us. Excited to be here today, and we're happy you're joining us. Today is November the 19th, 2022, and we are live here every Saturday morning for the Minnesota Real Estate Show, hosted by our good friends at Luminate Home Loans. Today in studio, Alex Grip, who does an awesome job with Luminate. The show is also hosted by Scott Wolmering and myself, Ryan O'Neill, with the Minnesota Real Estate Team and RE/MAX Advantage Plus. Very appreciative you're joining us today. We've got a fun show in store. We're live here from 10 a.m. to 11 a.m. on Twin Cities News Talk AM 1130. Also on, of course, social media, wherever you might be seeing this, LinkedIn, Instagram, YouTube, Twitter, Facebook. Thank you. It is an interactive show. So as we're talking today, if you have thoughts, comments, feedback, please don't ever hesitate to join in. A lot of different things to discuss today, but I want to welcome the three other gentlemen you can see on camera. First, in the blue shirt, Mr. Adam Hartung, Midwest Money Management. Adam, good to see you. We've got Brad Sanford right in the middle there. Brad, nice to see you, buddy.
Good morning.
Nice to see you. And Alex Grip. Alex with Luminate Home Loans. Alex, good to see you, buddy.
Great to be here.
Yeah, we've got a lot to talk about with the business, with the market. And again, as the show is going along, please don't hesitate to interrupt us. The first segment, we are going to talk about the real estate update, the mortgage update, where interest rates are at, and we're also then going to be diving deep later in the show with Brad Sanford, Farmers Insurance, as well as Adam Hartung, Midwest Money Management. Great to have both these guys on just to talk about kind of what's going on in the world overall. Adam, are you nervous?
Am I nervous? I am not nervous. I think
I'm nervous for you.
it's got to be.
Oh.
I'm nervous about the radio, or
Here we
nervous
go.
about
We're going
the
live
world?
on
Right,
Twin
okay.
Cities News Talk, AM 1130. Good morning, and welcome to the Minnesota Real Estate Show. Thanks for joining us here on November the 19th, 2022. And we're live here every weekend. Again, the Minnesota Real Estate Show hosted by our friends at Luminate Home Loans. Today in studio, Alex Grip joining us, as well as the show being hosted by Scott Wolmering and myself, Ryan O'Neill of the Minnesota Real Estate Team, RE/MAX Advantage Plus. Grateful for you joining us for today's show. We've got a fun show ahead, a lot to talk about with the business, with the market, and where things are currently at right now. We also have two of our great partners in studio, Adam Hartung, Midwest Money Management, as well as Brad Sanford of Farmers Insurance. As you're listening, as you're watching, we welcome your questions, comments, thoughts. 612-294-6949 is how you can join us, 612-294-6949. We will take any questions or texts live on air as well. And again, just want to say welcome to our other guests in studio. Alex, thanks for coming in, buddy.
Yeah, pleasure to be back.
You got new glasses, man. I like those.
Yes, new for the show audience.
New.
I just want to keep things fresh for you guys.
Keep it fresh indeed. Got to welcome on as well, friends Brad Sanford, Farmers Insurance. Brad, good to have you, bud.
Thank you. It's Saturday morning. Grab some coffee. It's cold out. Join the conversation.
Yeah, grab some coffee indeed. And Mr. Hartung, good to see you there, young man.
It is good to see you as well.
And we asked Adam if he's nervous, and you're still thinking about this.
I'm still not nervous. I think it's been 20 years I've been doing the show with you and Scott now. So any nerves I had have gone out the window.
Any nerves have gone out the window. Let's dive in right away here. First segment, talking a little bit about the market and what is happening here in the Twin Cities. Alex, I think we're going to dive in first interest rate wise. Obviously been a huge shift this year. Rates super low at the beginning of the year. They've basically doubled in a short amount of time. What's cooking?
What's cooking? Actually, some good news for you guys out there. 30 days ago, we were talking about rates in the low sevens. Now we're talking about rates in the upper sixes. So it's very exciting for us to drop about 0.5%. We got a big jolt for positive rate momentum when inflation numbers came in lower than expected, and the market reacted favorably.
So ballpark, where are things at interest rate wise now?
About 6.6, 6.5 is where we're sitting in most scenarios today.
What have you been finding with any of your clients? Any stories of buyers who you found are waiting, or people that have been renting that are saying, hey, you know what, Alex, we are going to take advantage of this market and look at buying something?
Yeah, a lot of positive stories. It's all about how you structure the purchase. I think we're having a lot more conversations today about setting people up for success coming into the new year. One thing I'm really excited about is for all of my variable income folks moving into the new year in 2023, when we take a 2-year average of certain people's incomes, we now get to drop off 2020, which, as you remember, there was a pandemic. So a lot of people are staying home and a lot of people weren't working during that time. So if you were an hourly worker, this is really, really positive news for qualifying for the home that you want coming into the new year.
Adam was staying home quite a bit. He's like, geez, Ryan, come on the show. And
Stay home financial advisor.
Yeah, we were not. Matter of fact, my team, we were very focused on being together in the office through all of it. There was the original 15 days to flatten the curve, and we all worked remotely for 15 days. And after 15 days, I said, that's it. We're all back in the office. So
yeah, Adam,
I didn't stay home.
Adam, like Alex, the room is full of, I know all three of you guys, incredibly hardworking folks. And the light just came on us here in the studio too. I had a text come in. Somebody watching on social media. Please don't hesitate to interrupt with any questions, comments, texts. Alex, I'm going to share some stats here as well from a real estate standpoint. People are like, what is going on in the Twin Cities? Either my home is not selling or my home is selling. New listings, new homes for sale, down 22.4%. So there's 22.4% less new properties that came on the market, only 965 this past week. Pending sales also down still pretty significantly, 37.4% decline in pending sales year over year. There were 751 pendings. And then the inventory is up slightly. It's up about 8% year over year, 8,858 homes for sale in the Twin Cities right now. Still very, very historically low. When you look at kind of all of the national headlines, you'll see, obviously, with the rising of interest rates, home sales closings have been kind of steadily on the decline. But what's interesting, I was just looking at some material. Lawrence Yun, who is the chief economist for NAR, he commented, he said, inventory levels are still extremely tight. That is why some homes for sale are still receiving multiple offers. And in fact, again, in October, 20% of homes received over the asking price. This was nationally. Interesting stat. Conversely, homes sitting on the market for more than 120 days saw prices reduced by an average of 15.8%. So I think what we're seeing, guys, is kind of a little bit of a tale of two markets where because there's such limited inventory in so many areas and price ranges for buyers, that when there is a very nice property, fairly priced, accurately priced, we're still seeing a lot of activity on it.
Yeah.
I mean, we're even with rates in the mid sixes, we're still seeing multiple offers. So there's a lot of those buyers out there that are waiting for that property. On the other hand, we're seeing a lot of listings where market time is increasing and increasing and increasing, and people that are saying, hey, you know what, Adam got $450 for his house back in March, so we should get $450 for it. instead of really looking closely at the last month or two, look at those comparable sales and price accordingly to those last couple months, which an appraiser is going to do anyway, Alex. So it's an interesting market, guys. It's causing a lot of frustration,
Yeah.
I think, for agents, for sellers, because we're not in the pandemic and rates are not at 2%. And now it's like we're getting back to a little bit more life as normal in the real estate world, guys. Any thoughts?
Well, I have a question first of all, and then some comments on that. But my question to you is how much in the last just 2 months do you think prices have come down? Like, do you have any stats on? Because again, we look over year stuff, but it's been such a change in such a short period of time. Like I can tell you, interest rates, for example, on money markets. So what you can get on cash, literally in about a 3-week period of time, went from almost zero to today in a decent money market, you can get between 3 and 3.5% again on cash. And that hasn't existed for 15 years.
So
and it happened over 3 weeks.
But why, Adam?
Because it finally caught up. Interest rates had been zero and almost artificially, even almost below zero. I know that sounds crazy, but rates were so low that cash could pay nothing. And even as the Fed first started to raise short-term rates, there still wasn't the ability for banks to make any money on that. And all of a sudden we got to kind of that point of critical mass and interest rates rose quickly. And now all of a sudden everybody's competing to try and keep their cash business. And so they've had to start raising short-term rates and actually pay something again. But like I said, it was literally over a 3-week period of time. It went from next to nothing to almost 3%. And now they're above 3%.
I'll have to say one of the reasons we love working with Luminate Home Loans, again, great company, great owners, local company. Alex, you guys, the company is still doing very well. And I would say, just when you look, again, you can just Google anything and see so many mortgage companies, a lot of these national companies that are kind of like, I hate to say it, kind of like Twitter, that have cut half their staff and are heading for the exits. Any thoughts on that?
Yeah, I think great businesses are built in down markets. And although there's still lots of opportunities out there, like relatively speaking, demand is way down. And when you're able to lead with the value proposition of leading with advice and actually helping people and not leaving them out to dry, people start to notice.
Good. That's a really good comment. Brad, have you seen the tick down with your business, like the real estate mortgage world last 3 to 6 months?
In new business policies, it's slowed down. Yeah, the service has picked up quite a bit with all the storms that we've had, but yeah, it's the new business has ticked down. That's one of those things that drives my dad nuts is that his savings, he gets like 0.15% from the bank, right?
Well, tell him, I mean, really, he should do some searching now because this is literally just in the last, 4 to 6 weeks. But he can get, I saw the highest rate I've seen online for an FDIC insured online high yield savings account is 3.6%.
Well, the banks had to hold on to a certain percentage of whatever deposits they had. So they never really wanted the money.
Right. Yep.
And now they want the money. So they're paying for it. And I told them that a long time ago, that when they want the money, they'll pay you.
Exactly.
Yeah.
And we're finally there where they want the money again.
Yeah. Adam, you want the money.
And, to your comment.
Hey, hold that thought.
Yeah.
Hold that thought. We're at our first break
All right.
here at the Minnesota Real Estate Show. Appreciate you joining us. The sun is shining here. It's coming in brightly on our social media stream. But we are happy you're joining us. We welcome your questions, comments, thoughts. 612-294-6949. Thanks for joining us. Appreciate it. Inga, good morning to you. I hope all is well with you and your family. Thank you. Thanks for the comment and thanks for tuning in. Adam, I interrupted you. You were going to ask.
I was just you had made the comment about good businesses being built in down markets, and that's again, I believe that too. We just had our company retreat that we do once a year where our whole team gets out of the office and talks about the future. But we've had our best year ever by far this year in terms of bringing in new assets. And I think to the point when things get tough and markets have not been easy this year, but that's when all of a sudden service matters. And when everybody else is hiding and when everybody else is trying to tuck tail and figure out how to just, cut staff or whatever it might be, that's when you got to really ramp things up and do the opposite. really attack it.
Yeah, your industry had the unique position for 10 years in a row. No matter what you did, everything was a winner.
Yep.
So everybody was picking winners in the whole industry. But when things like become challenging, that's when you actually have to use some strategy and
Yep.
and help people through
No,
that.
I completely agree.
Random thought.
Yeah.
Sometimes I like random thoughts.
Not Ryan.
Crypto. Was it FTX?
Yeah.
FTX, yeah.
I mean, what in the world? So the whole thing just imploded.
Yeah, but again, the guy that was heading this up, and I forget his name now, but this is such a classic example of this big business who deflected all the attention away from all the wrongdoings that he was doing by being a pro-regulation. He was the biggest voice in Congress for saying you need to regulate the crypto industry. So you get a guy who is knowingly manipulating the system and kind of breaking all these rules. And then he pretends like he's the guy here to champion all this regulation. And the worst thing that's going to come out of this, Ryan, is that there is going to be a whole slew of regulations that come out of this debacle. And the problem is this: not one single regulation they're going to propose would have prevented what happened. Just like after Bernie Madoff stole all that money from people and the SEC looked like they were idiots for not knowing about it, they passed all these new regulations. Not a single one of them actually would have done anything to stop Madoff. And that's how we get all these stupid regulations, because they look bad, and so they feel like they have to do something, but they don't know what to do.
Yeah, it is. It's an interesting time. We had a couple questions come in. We'll get to right after the break as well. 612-294-6949 is how you can join us. Crypto was in the news. Twitter was in the news. Are you a Twitter guy?
No, I'm not.
Okay.
But yeah, it's an interesting story to follow, especially like every day there's more news about it.
Brad, you like Twitter?
I tweet.
You do? Here we go. We're going back live on air. Twin Cities News Talk, AM 1130. Thanks for joining us. Hey, welcome back, everybody. The sun is shining in Minnesota. Finally, indeed. We're grateful you are here joining us at the Minnesota Real Estate Show. It's cold, though. Winter has arrived. We've got a Thanksgiving is on the horizon. Want to wish a happy belated birthday to my dear mother, Kathy, who had a birthday this week on the 15th. The big birthday to Mom. My sister-in-law, Mary's got a birthday coming up soon. My brother-in-law, Bill, has a birthday as well. So a lot of birthdays in the O'Neill family. We got a party.
You know who else's birthday it is today?
Who?
Mr. Bernie Borski.
Bernie, I know. Bernie Borski, wonderful guy, longtime agent on the Minnesota real estate team. He's a client too.
Yeah. Happy birthday, Bernie.
Yeah, Bernie is
Happy birthday, Mom.
Yeah, happy birthday, Mom.
Yeah.
A lot of birthdays all the way around. Kim texted in asking, are sellers paying more closing costs in purchase agreements now? Yes.
Alex is raising
Yeah,
his hand.
Alex, you got it, buddy.
Over 50%
Over
of
50.
accepted contracts in the Twin Cities have seller paid closing costs.
Wow.
And the average is slightly more than 3% of the purchase price. And just so you know, lenders love that.
Why?
Because it makes their buyers very happy, because you can use that as a tool to save people money or lower their monthly payment.
Yeah, it is. Again, so it's becoming more common. The last couple of years, pandemic, sellers were not paying closing costs because, again, sellers really had all the leverage. Now, in this kind of market, buyers are realizing they have a little bit more leverage. They can negotiate a little bit more in most cases, not in all cases. I should add average market time, days on market right now, is still right now it's 32. So 32 days on market is the average days on market. If you look at it, I'm looking at a historical graph in front of me. It's still historically very low. So that's what's hard to understand about, again, I think we're kind of creatures of what was it like yesterday or what was it like last week or last month. And it's been like, again, I've used an analogy, but it's been like drinking 3 Red Bulls having a little too much Red Bull, and you're like, oh my gosh, what is going on with my life? Well, now that the Red Bull is wearing off and you're kind of, coming back to normal, it's realizing that we are entering more of a normal market in the Twin Cities. And again, there is not much inventory. So, I mean, if you every day on our team, the Minnesota real estate team, I'll see an email of, hey, I have a buyer looking for a 450 two-story in such and such city. Does anybody have anything? So, I mean, that's the thing. If you are a seller, and I know Mike Overson talked about this last week, a seller and a buyer, it is, even with the rising rates, you can take advantage of the market, the historically low market, but also then on the buying side, depending upon what range you're buying, do some negotiation there. I don't know, it's just an interesting time, guys.
Yeah. Well, we started talking before when you were talking about what was going on in the housing market and interest rates and did we have any thoughts? One of the things that occurs to me is we've gone through a massive adjustment in a short period of time with how much interest rates have gone up. And that was kind of the worst part of the pain in terms of the adjustment. So I think the biggest part of that adjustment is over, but there is going to be another longer term wave of adjustment. And what I mean by that is this: for over 40 years in the United States, interest rates have been steadily falling. They bump up and down and bump up and down, but year over year going forward for over 40 years, interest rates have been falling. And that has enabled people this idea of their house appreciates, it gets to be a larger amount of equity. They can sell that, buy a bigger house at a lower mortgage interest rate and keep their payment the same or lower. And that trend is not coming back. I think it's going to be a long, long time, like decades, before we're in a situation where we have long-term falling interest rates. And I think we're going to have the opposite for a while. We're going to have gradually rising interest rates. And I do think there's going to be less people that move as often as they had been in the last 40 years, just because of the pure economics. I mean, so not only we think about what the higher interest rates means to the buyer right now today, but think about what it also means to the seller, because if you're a seller, you have to also go buy something else. And so if you're going to make a lateral move right now from a $400,000 house to a $400,000 house, that's still an increase in payment to you of 50, 75% because of the change in interest rates. So I do think there's going to be like this longer term dynamic to readjusting. And I think people are going to change their behaviors a little bit.
And then the question is do you change? If it's going to cost you more and go lateral.
Exactly. I mean, I can tell you all kinds of clients that were planning to make some type of a lateral move because they're transitioning into retirement and what they need, what they want has changed. And now it's just not economically viable anymore. Like it had been their plan to do this, in this time frame or the next couple of years for a long time. And now there's a lot of them that just simply aren't going to do it anymore.
What I would say to that, though, and again, I think that's maybe a dose of reality. We would all agree in some sense, but what's interesting, again, and I commented a little bit last week about this, what's interesting about the Twin Cities is, again, when you, last month or two, if you're out and about at a coffee shop or church or wherever, and you say, hey, Brad, chatting a little bit, and they ask what you do. And you know what, I'm in real estate. I'm a real estate agent, a real estate broker. And then it's almost immediately like there's a death in the family. You know what I mean? Or you're in mortgage, and I'm sure you get it too. There's an immediate, I'm really sorry, Brad. I mean, is everything okay? And again, I don't want to make light of it, but I think, again, what I've learned over 20 years of doing this, we've seen markets where it was all bank-owned property, all short sales, all these negative things, big things. But what's interesting about Minnesota is there's still a very good chunk of business that happens for all different kinds of reasons. And I think we will see some folks get out of the real estate or mortgage world, maybe that we're doing it super part-time, and more of the full-time people like an Alex Grip, who is service-oriented, providing good knowledge, helping consumers. You're going to be capturing more of that business. And that's what I saw in the other downturns. And that's why, again, I'm not just sunshine and rainbows always, but I am positive and hopeful with the market here in the Twin Cities.
Yeah, I think back to what Adam was saying around that may be true that people may stay in their home a little bit longer, but part of working with professionals is I would love for people to start asking more of show me how, because saying that your cost of living is going to increase anytime you want to move
Sure.
may not be true all the time. And you can work with people to show you how you can maintain the same cost of living or decrease it despite what's going on in the market, despite what you read in the headlines.
Yeah.
And I totally agree with both.
Yeah, take that, Adam.
I wasn't-
We're going back at you.
I did
Not
not
a big
mean,
shot. I'm
I
just
did
saying.
not mean to be overly negative and say that, boy, there's no hope. You can't do what you want. That's not what I meant. What I did mean was this, though. I do think that there were a lot of the fringe people that were buying new houses every couple of years simply because financially it made sense, or simply because it was easy and there was zero pain, or there was like a lot of that part of the market. I think is going to go away. Like I think there was a part of the market where people were literally making these decisions to move, not for any other reason than just because they could.
Yeah, I had another text message question come in that says Maple Grove has put in a rental license moratorium in place from June of 2022 to June of 2023. Do you think cities can stop developers from building entire neighborhoods of single-family rentals? Obviously I am not a huge fan of that. I do think there is a real need in the Twin Cities, in all cities, areas, and price ranges for solid rental housing. There is an assumption, oftentimes incorrectly, that if someone is renting, that it's a bad decision. And boy, they're just going to be bad people if they're renting. Again, I'm a very small landlord, but from doing this over 20 years, I've met a lot of wonderful people that rent for all kinds of different reasons, that in many cases could buy homes for cash. And so to not allow rentals in cities, I think is a bad move, guys. I think it's really bad. It's not good. And it's a part of the market, Alex, that I think, Brad, that I think we need. Any thoughts on this, guys?
Well, I think it's a fine line, right? If you have too many rentals in your city, then it becomes more of a rental city and not a home ownership and people invested in the community and in those kinds of things. So I think you're right. The stigma is that when you're renting, you don't get out, you're not involved in the community and those kinds of things. And I've talked to city council members, and I know that there's another city looking at doing the same thing because the rentals just have caused some problems.
Alex, what do you think?
I don't want to know why that there's a rental application moratorium.
Well, again, it is without a doubt and I understand as neighbors, again, I'm not saying if you live next to a rental property and they're not taking care of the property, they're not doing their part to keep your neighborhood up. What I would encourage you to do is don't hesitate to reach out to that landlord, talk to him or her. Generally, it's going to be someone who does care. And wants to do the right thing. I know you've been a landlord as well, and sometimes it's a simple dialogue to say, perhaps it's a cultural issue that maybe there's certain things that the way you care for a home that's a little bit different that from a cultural standpoint. I don't know. I just have seen so many good people rent. I think it's a bad move, guys.
I do too. I mean, just in general, I am always very pro. You can't have no regulation, but I think we overregulate almost everything. And so I think you almost always go too far. The free markets will almost always make better decisions than the governments will. And so I'm opposed to it.
Yeah, we're at the halfway point already at the Minnesota Real Estate Show. Appreciate the questions. Thank you, Rick, for the comment. He says, Bill says hello. Our friend Bill, good to see you. Rick, Cindy, thanks for the comments as well. 612-294-6949 is how you can join us. We'll be back after the break. So we had another comment here. Rick commented, he says, the problem is BlackRock is coming into communities and buying up homes at ridiculous prices. So what Rick is referring to are maybe these national investors that are coming in. Here's the hard thing, though, is there's no inventory. There's no inventory.
Here's the deal. It's like, yes, that may have been more true in 2020 and 2021
Yes.
when rates were so low, appreciation was so ridiculous. But now, like Adam was saying, now they can just get that 3% without a freaking hassle of
Yeah.
owning a home. BlackRock doesn't care about single family homes.
Yeah.
They want to make it easy on themselves. They can buy treasury bonds, they can
Yep.
invest their cash with Adam. Like, that's what they're doing. They're not necessarily buying.
Well, and
homes.
again, if you've noticed, a lot of those companies, those big companies, you've seen the national headlines, have stopped what they're doing
Right.
of buying, flipping, guaranteed sales, all this
And
because they're
that's
losing a
because the
pile of
market
money.
is fixing itself. I mean,
Yeah.
there are dislocations in the market. Companies recognize that. And the truth is, when a company recognizes a dislocation and they come in, they end up doing a service. I mean, they fix the dislocation. When you recognize that there's a place where there's a need for something and you come in and you buy it and you provide that need, and then eventually the market equalizes and there's no need to do it anymore.
Well, that's
Brad?
why I said I think there's a fine line, right? Because
Yeah.
if we have people here that are looking for their own home, competing with BlackRock is it's not really even a competition, right? And so that's why I say it's a fine line. The conversations I've had with city council members is, look, the rental properties, we have people that want homes, but they're owned by these big companies and
You know, and I would say though that it is a competition with BlackRock. You say that it's not a competition, but realize BlackRock at the end of the day, it's all about dollars and
Adam,
cents.
scoot a
So
little bit left
there
for
is-
us so we can
there
see
is
it.
an
There we go.
absolute limit as to how much they will pay. Whereas the individual who needs a house and really likes that house can say, you know what, BlackRock says that finances don't work beyond 200,000. I'm willing to pay 201. I mean,
Here's the
I do-
reality
I
of the
do
market
think
though, guys,
they
is
can-
they're not buying. There's no BlackRocks
Yeah,
buying
at this
right
moment.
now.
anymore
In the
anymore.
Twin Cities.
Right,
Yeah.
anymore.
They're not there. Sellers, again, historically low inventory, 9,000 homes for sale. When we did this show back in the mid 2000s, 36,000 homes.
Wow.
So 4 times as many homes for sale on the market. So again, we're not just artificially saying it is a good time to sell. If literally agents on the Minnesota real estate team, we've had multiple offer situations in the past month on listings. We also have some listings that are sitting because again, if they're not priced correctly or in a condition that's desirable, they're sitting. Any thoughts?
Yeah, no, I just think that the home ownership is such the American dream that, with BlackRock, I would disagree in that they could just say, we'll pay an extra 5,000 for that property because it's an investment that they're going to take over years, right? Whereas I may only qualify for a certain amount. And now I get into, is that home to me worth that much? And now we've lost a homeowner invested in that community.
Hey, let's cut the BlackRock. Enough BlackRock talk. I do want to talk insurance. What is going on from the insurance world? I think it's important. What's new from your perspective?
There's a lot of insurance companies that are failing right now.
Hmm.
The largest insurance company is in the third quarter took a huge loss, $4.57 billion.
Because
So-
of Florida?
That's part of it, but they said it was because of auto. And so
Wow.
there's huge losses. So there's going to be some rate increases.
How are they mispricing auto insurance? I mean,
Yeah.
there's so much statistical data. How are they screwing that up?
It's one of those things where I've said many times on this show, the only way to get new customers is from a first-time home buyer seminar or taking them from another company. And if you're lowering your rates to get that client, and then something happens once you've lowered it costs you big time. So,
Yeah, I had a comment I just wanted to share. Thank you, Tara, who also texted in, a fellow agent, awesome agent, does a lot of business. She said interest rates versus home prices is basically a wash from May until today. Buyers need to be better educated. Exactly what you were talking about there, Alex. And we're going back live on air. Sorry, I didn't mean to interrupt there, Brad.
No, you're all right. That's all right.
Hey, welcome back to the Minnesota Real Estate Show. I hope your weekend's going well. Hope you're doing something fun. We got winter in the air. It's a little bit chillier, but Thanksgiving is around the corner. Love the Thanksgiving season. Did want to do a shout out. My friend Fong Kao. Fong has an awesome listing coming on the market actually today, 9141 Alamo Street Northeast. It's in Blaine for $395,000. It's a 4-bed, 2-bath, 3-car garage home. It's a 3-level split built in 2000. very well maintained. It is a quiet neighborhood. It's got a new roof in 2019, all new appliances, granite countertop, new flooring in 2021. Again, 9141 Alamo Street Northeast in Blaine for $395,000. Check that one out. Fong Keo has that one listed. And I interrupted you, Brad, as you were talking about how is the insurance world. And you said, tell us again.
That there's a lot of carriers that are failing, and there's a lot of carriers taking losses. So huge losses.
So, and there's a difference between failing, obviously, and just taking losses. So when you say
Yeah.
failing, are you expecting to see companies actually going under?
The article I read was specific to Florida, but there were 3 insurance carriers that failed that last month
Wow.
in Florida. I'm assuming because of what you said, because of the hurricanes.
Okay.
But there's a large carrier in this nation that is in the third quarter took a $3.57 billion loss. So
Okay.
Insurance.
yeah, and in the cars nowadays, you bump into something, you've got all these cameras and sensors and everything. You can't really just put a new skin on the bumper, right? You got to replace everything. So costs have really gone up for the
Brad, talk a little bit just about your business, who you are and how you're helping people in this market.
Well, I mean, I'm one of those guys that loves his clients. I reach out to them all the time, answer questions. I'll go through your policy, or what we call declaration page. I'll go through it and tell you what you're covered for, what you have, what the limitations are. As Alex has pointed out, educating your client really creates a bond between you and your client, because now they understand what they're paying for. No longer is it just I'm paying insurance this month, that kind of a thing. It's more of I'm protecting my assets. I know what I'm paying for. I know what I'm getting. And so that's how I approach business. I always look inward first and say, how would I want to be treated?
Sure.
And that's how I run my business.
Yeah, again, Brad is with Farmers Insurance, has been a longtime partner on our show. If you go to mnrealestateshow.com, you can see all of our great partners. These are not just random people that we met or picked up. They are people that we've worked with all of the home sale transactions over the years by doing the radio show. Trusted, service-oriented, focused on you as the consumer. Brad, what do you expect moving forward with insurance? Now, rates getting a lot more expensive for everybody, or thoughts?
Yeah, I'll be the bad guy. Rates are going to go up. It's going to cost you more for things, absolutely. And they're talking about writing the costs to the losses that they have. But a lot of insurance companies are trying to take technology and make their service better, right? And so it's kind of a race right now to spend money for technology to help out their insureds, so that they have things at their fingertips. They can take pictures of an accident and upload them, and they can have a conversation with a claim representative that day, those kinds of things. If you need your ID card, because you're my wife and you drive too fast, you show them the ID card on your phone, right? Those kinds of things. So I think you're going to see costs gradually go up. You might see them go up a little faster than you want them to, but it'll write itself out and it'll all fix it. And then like you said, it's something we got to get used to for the next decade or so.
I do have to give again a nice shout out to my friend Brad. Brad just did a wonderful job helping a friend of mine, an elderly friend of mine, who was really kind of in a pinch and needed some solid insurance help. So Brad really went above and beyond to help this friend of mine. And so I could tell, Brad, why you've been so successful in your career just by how you approach that transaction.
Thank you. That's very nice.
Yeah.
Absolutely. That's what I think every business owner, if they base their business off of servicing the client, I think you're always going to be successful.
Before I forget to, we'll continue the discussion, but best way for people to reach out insurance needs. Maybe they want someone to review their policy. Maybe they own rental property and they're like, hey, I need another quote on things. Thoughts?
You keep asking me that, so they shouldn't call you, is what you're saying, right?
That's all right. That's all right.
MinnesotaRealEstateShow.com, MinnesotaRealEstateTeam.com, is the best way under the insurance tab to get me. And my numbers are on there, the link for my email, all that stuff. We'll will be there to reach me.
Yeah, good stuff. Good stuff indeed. Adam, can I read your disclosure?
Yeah, go ahead. Read
I got to read. So Adam Hartung is a certified financial planner professional and an accredited investment fiduciary. He's the president and founder of Midwest Money Management, located at 17316 Kenyon Avenue in Lakeville, Minnesota. Securities offered through Parkland Securities LLC, member FINRA and SIPC. Fee-based investment advisory services offered through Sigma Planning Corporation, a registered investment advisor. Midwest Money Management is independent of Parkland Securities LLC and SPC. Adam, thanks for coming on today. It's been a great segment.
Oddly enough,
exactly.
we're up against the break.
Yeah, I know.
We're-
That's all we got. That's all the time we got for you, dude.
we're finally compliant now. Yeah. So how's everybody doing?
Hey, you've had, so again, real estate, mortgage, Alex and I were talking, obviously rates have doubled, a lot of people getting out of mortgage. The real estate business has slowed down, a lot of people getting out of real estate. The stock market's down, what, 18, 20% or something? Not a good year for your business.
No, and the worst thing about the market this year is not only that stocks were down, but that the aggregate bond index. And I didn't look at the update in the last week. It probably has come back just a little bit, but a week ago it was down 16% for the year. So all the major asset classes, again, going into the year, cash was paying nothing. Stocks were overvalued. Bonds were overvalued. Everything has come down. The good news is that going forward, we are in a very different starting point today than we were in January. And so even if stocks and or bonds continue to have a difficult time going forward, we have a lot more options. There's a lot more tools. There's more things available. If you want to be defensive and just kind of hide in cash, for the first time in 15 years, you can actually make some money just sitting on the sideline and being a little more defensive. I mean, investors have
Just
been,
hiding in your cash.
Well, I mean,
We should have had that problem.
I know, right? You and I both.
investors have been in a very difficult position for years that even if they were conservative investors who didn't want to take any risk, they really couldn't get any return without taking at least some risk. And that has equalized just a little bit. And it is what's interesting. I was thinking about this. It was almost a year ago today. We were talking about what was going to be happening going forward. And I was the guy that said, hey, interest rates are going to rise. When they start rising, they're going to rise faster than anybody thinks. And we talked about housing a little bit. And I said, if you're looking at moving or buying a second home or doing some of those things, I would accelerate those plans. If you're planning to do it 2-3 years from now, I would do it now.
He also predicted that Elon Musk would buy Twitter.
You did?
No.
Yeah, when he said he was going to.
Hey, we're up against the break here.
Oddly enough.
We are up against a break. Appreciate people joining us on social media. We also had a great a question come in that I will hit after the break that says, hello, I'm wondering if you have information on what areas in the Twin Cities have the most homes for sale per capita. Is it the north and west suburbs, south of the river, certain cities or towns? We'll hit that after the break here too. This is the Minnesota Real Estate Show.
And that listing time, does it tell you based on like the value of the home, like over 500, less than 500? Does it tell you which ones are being listed longer, taking longer to sell?
Yeah, I mean, just historically, the spendier the property, oftentimes the more market time. There's less buyers, generally speaking, less people that can purchase the $1 million, $2 million home. However, again, interestingly enough, with such limited inventory, you'll see some of that super spendy stuff still penned or get an accepted offer fairly quickly, which is interesting because maybe people are hiding in their cash. Alex?
Yeah, I just think that a lot of people are in a better position over the last like several years, even the last 2, even the last 10, to make those big moves.
Yeah.
Question for you is what we get a lot in the real estate world is like, I don't know if I'm ready to buy yet. I'm gonna wait. I'm gonna do this and that. I'm gonna save this and that. And you ask them the question, you're like, well, how much do you need? And they're like, well, I don't really know. Do you, from a financial planning perspective, have any like rules of thumb of like, I know this person is ready when they have X amount in savings, or like they make this much money, or like, do you look at somebody's situation?
Good question, Alex.
Yeah, it's a great question, and we look at that and do that kind of analysis all the time. And I'm trying to think. I have never tried to think in terms of a rule of thumb on this, and I'm not saying that if I thought about it, maybe there wouldn't be one, and I couldn't come up with something. But we take such a individualized approach where it's really all about your situation and where you're at and what your needs are, that I haven't taken a step back to try and think about, could I answer the question just in general?
Let me ask.
Well, that's what I was expecting, because like everybody's situation is so specific, and
Yeah.
that's why they need to talk to you, and that's why they need to talk to
Yeah.
the client and figure it out.
But I will say this, the people that are worried that they're not in a position, generally the people that aren't in a position to buy are the people that don't even think about those kind of things and just buy, and then they're trying to dig themselves out of a hole.
Yeah.
My experience is the people that are worried the most are oftentimes the same people that I can show them are actually the most ready and
Yeah.
are in the best shape,
Right.
because that same mentality of just the fact that you're thinking about whether or not you can afford to do it tells me that you probably make pretty good financial decisions across the board,
Mhm.
and you probably are in better shape than you think you are. So of all the things that come out of meeting with me, I think sometimes people just walk away realizing they were in better shape than they thought they were.
So Alex, what percent of the income is as far as qualifying? So if someone makes, as far as when you're pre-approving them, how much of the income, what percent can you take from a qualification standpoint?
Yeah, the thing is like, if you want like a quick and dirty rule, I'm gonna say 50%, but it's like 50% in the conventional world, 56% in FHA.
Hmm.
And the thing is, we care about gross income. And sometimes people make a salary, sometimes people have a bonus structure, some people are hourly, some people own their own business. So what is that gross number that we're looking towards? It depends on how you make money.
Good. Here we go. We're going back live on air. Thanks for tuning in. Yeah!
Little Van Halen.
Welcome back to the Minnesota Real Estate Show. Hope your weekend's going well. Thank you. We appreciate you tuning in. And again, question as far as where to look by city for homes per capita. I'm going to share a great website, our friends at the Minneapolis Area Association of Realtors. It's just mplsrealtor.com, mplsrealtor.com. If you go and then if you look at their just weekly market activity report, what they'll actually end up doing is you can actually see these are the stats we share on the show, but then also you can look at local market updates. You can pick a city, you can pick a geographic area. Again, this is something that your agent will help you do as well to really look and dive into a particular area. And so that will help you analyze cities, communities, price per capita. I would say there isn't a hard and fast rule. It's not like everything in the north is not selling and everything in Burnsville is hot on the market. I'd say if the property is priced correctly and is in a good condition, it's still selling. It's very quickly in the market. If it is not one of those two things, even if it's in rough shape, if it's priced that it's in rough shape.
I was just going to ask that
Yeah.
question. I mean, are there those buyers out there? Because when we talk to clients sometimes and they say, well, I got to do this, I got to do this. And
Yeah.
they say, okay, well, maybe you'd be better off just pricing it to sell as is. Are there buyers for that, or is that not what people want?
There are some of those buyers as well that will do that, and they're definitely out there. We were talking again to Alex over the break about amount of income needed to qualify. You mentioned 50% is kind of just a fast and quick rule. 50% of gross income.
Yeah, so what we're really talking about that right there is a debt to income ratio, which identifies your purchasing capacity or your lending capacity. So let's say you make 60 grand a year, that's a gross income of 5 grand a month. And so what we'll try to do is you've got a max housing payment of $2,500, which is 50% of 5 grand. We're trying to fit that proposed housing payment and translate that into a purchase price.
So Alex, the 50% now is that what we used to refer to at least as a backside ratio, where it's all debts combined? So if you got a car payment, that's included in the 50%, that $2,500 a month number, correct?
Yes.
Okay.
Yes, I mean, like a true financial.
You're smiling. Why were you smiling,
because that's a great point. So yeah, all debts combined. So student loans, car loans, revolving debt, in addition to that housing debt payment is that backside ratio.
So what's going on with the student loan deal? Is it kicking back in January, or is it
As-
unknown?
As of right now, for sure. So if you did a loan today or got pre-approved today, we would use half a percentage point of that loan balance to qualify you in that backside ratio.
Yes.
As of right now, starting January 1st, we would just take whatever your minimum payment is on that loan.
Interesting stuff. Adam, what's going on in your business? Again, I think part of it is, again, it's been one of those years, everyone's kind of gotten whacked a little bit after the pandemic where businesses were hopping. Your business has gotten whacked, I would think.
Yes.
Or your clients.
I do think, our clients have for sure. I do think we did a much better job than a lot of firms out there. As you know, Ryan, we take a very active approach. And so, especially when the market was down more significantly earlier in the year, we had done a very good job at that point. There was a very big gap between kind of the losses that our clients saw and how much the market got down. And that's largely because we were hiding in cash for a big percentage of the year. As the market has started to recover, and there are signs that we're maybe in a recovery mode, I would be very hesitant to say that's going to continue forever. But as of right now, we're kind of in a recovery mode. We have pushed back, and we are now also back to fully invested again at this moment, waiting to see how things play out with the market. But it's been an interesting year, and these are the times, though, I think, where people are glad that they have somebody that they can trust, as opposed to riding it on their own.
I have to give a quick shout out for Adam again. The nice thing about Adam and his company is if you're listening, you're watching this, and you're thinking, look, Ryan, I'm not hiding in cash. I got no cash to hide in. If we all know real life, but here's the thing. I'm such a big believer in finding a really good trusted person in certain aspects of your life to help you and your family. So if you are without a job right now, if you have no money, if you have horrible credit, whatever the situation is, Adam is the type of person and the type of guy that will sit down with you and actually genuinely help you. And I think that is very unique. Brad and Adam were talking before the show that a lot of people in the financial world, they have kind of minimums. You need a certain amount to talk to the guru. The nice thing about Adam, again, is he can look at your whole situation holistically. I think it's super important, Adam. I've referred so many people over to you over the years in confidence, knowing that you care and you have their best interest.
I appreciate that, Ryan. And everything you just said is true. As a business owner, I do want to point out that if you do have lots of money and want our help, we will help you as well. We don't just specialize in someone who has no money and is in bad shape. But having said that,
yes, Ryan.
We are also, but it is true, and you're right. Most firms wouldn't spend any time with those people, wouldn't help them. And we just got done with our team retreat meeting again and talked about the future of the company and the fact that we are committed to helping anyone that we feel like we can help, regardless of whether or not they've got a lot to offer back, at least at this moment. And some of just in the last couple of years, sometimes it's because of an inheritance or them referring somebody else. But, I've had a number of clients that I would tell you that if I'm being honest as a businessman, we don't probably make enough money on them to really justify the time and the effort that we put in them, but we do it, out of genuine care for them. And, we've had a couple of A-level clients come from those scenarios. So, it's something that I just personally feel strongly about.
You could make an argument for all three of you in the room that if you think of, you need that person. You know what I mean? If I'm oh my gosh, we're thinking of buying a home, we're thinking of refinancing, I need that person. You need someone trusted. If I've had, oh my gosh, we got hail damage, we got this, we got that with insurance, you need that trusted person. And I don't know, I think in today's world, we all, and I'm guilty of it too, sometimes you focus so much just on price, when in reality, it's gimmicky. Like it's gimmicky by companies that are marketing to you to get you to call for something versus having a trusted person that will pick up the phone. I could call Alex, he's going to pick up his phone. I could call Brad. I don't know. I may be old fashioned that way, but I just think so much of business that is important, guys.
I hate gimmicky stuff. I really do. Like I'm so opposed to it.
Yeah, I don't know if you find that a lot, Brad. I'm sure people, hey, you go to the big national company and they got you beat by $100.
There's $100. There's true value in having a trusted advisor. Maybe you don't qualify for a loan right now, but going to Alex and having him help you get to that point where you do qualify for a loan, that's invaluable, I would say. And the fact that you are willing to take your time to those that are bathing in cash and those that aren't. I mean, I'm sure at some point they have to have some disposable income and for something for you to work with. But I think that's just admirable. Absolutely.
Yeah, you do have a lot of clients. I know that obviously invest a lot. We're at the home stretch here, but Adam, thoughts for people as they move forward, best practices.
One last thing that I want to remind people, just because it's towards the end of the year right now, there's a lot of things like IRA contributions, HSA contributions, where you've got till the April 15th deadline tax-wise to contribute for calendar year 2022. But there are a couple of things that have to be done by December 31st. One of them is required minimum distributions, RMDs. And these laws have changed in the last couple of years, and so there's some confusion out there. But if you turned 72 years old this year, calendar year 2022, and you have any money in a pre-tax retirement account, so 401k, 403b, IRA, any of those pre-tax retirement accounts, you are required to take a required minimum distribution. They are required by December 31st. If this is your first year, so if this is the year you turn 72, you do actually this first year have until April 1st, not April 15th, to take that distribution. But everybody else that's been taking required minimum distributions has to get that done by December 31st. It is a 50% tax penalty if you do not take the required minimum distribution on time. It is the most punitive penalty that the IRS inflicts, and so you just got to make sure you don't screw that up. If you don't know whether or not you need to take an RMD, call me. Call somebody, call either your advisor, call me, and we'll help you walk through that.
Best way for people to reach you.
They can give us a call at 651-204-3000. Again, 651-204-3000, or they can find us online at Inland Real Estate Show or MidwestMoneyManagement.com.
Great job, Adam Hartung. Brad, best way for people to reach you.
MinnesotaRealEstateTeam.com. Go to the insurance tab or call me at 651-690-2076.
Nice job, young man.
Thank you, sir.
Alex, best way for people to reach you.
I need you to bring up that Google machine and put in getagriplone.com.
Yes.
Instagram handle or my website. Everything is on there.
Nice job, buddy.
Thank you.
Yeah, find Alex on Insta. You're on Instagram. He's got some great content out there to help you as a consumer. Thanks for tuning in. This has been the Minnesota Real Estate Show. Reach out anytime. The Minnesota Real Estate Team. We are here to help you. Have a great weekend. Fun show. Thanks for tuning in, guys. Nice job, all of you. Thanks for everybody for watching. Have a happy Thanksgiving to everyone. We'll be back next week. Look forward to seeing you.